Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
I would say happy Monday to you, but there's not a lot going on that feels happy as far as market valuations go today. The S&P 500 is down 68 points. It's down 1%, sitting at 68.41. Still pretty close to that all-time high, right around 7,000. And when I say pretty close, 2 to 3%. The Dow Jones Industrial Average sitting at 48,903, down 722. That's a big number. Down 1.4%. The NASDAQ down 259, down 1.1%. The Russell 2000 down 55. That's down 2%. Across the board, major markets in the United States are lower. They were also lower in Europe. The FTSE 100, the CAC 40, the DAX, all trading lower. Then you jump over to Asia and see how things did overnight. Same type of story. The Nikkei 225 down 1.1%. The Hang Seng Index was a winner. Bitcoin sits at 65,574, down 3%, down $1,968. Zooming in a little bit closer on the action for the day, it has hit a low of 64,416. That's under 65,000. The markets are on a risk-off mode, meaning the Dow, the NASDAQ, and the S&P 500 are trading lower. For now, Bitcoin trades lower with the markets. Also trades higher with the markets. So, are we at a sell-off level of the markets? Probably not, when you're talking about 2 to 3% from all-time highs. 10-year Treasury sits at 4.03%, getting close to that 4% level, which becomes more attractive psychologically for buying stocks versus leaving money in cash or cash equivalents. Gold's trading up $150, well over $5,000 now at $52.31. Silver's trading up $4 today, up 5.6%. So gold's up let's just call it 3% for the day. Brent crude is above $71 a barrel, trading at $71.82. So we're seeing it. It's for real. It's Manic Monday tied towards the Manic Trump tariff revamp. NVIDIA is going to have its much anticipated earnings report on Wednesday. At less than 24 times estimated forward earnings, NVIDIA is trading not far from its lowest price to earnings multiple in 5 years. It's also well below the 5-year average of roughly 38 times. That stock is poised for a trade. Do you have the courage to go after it? Especially with a lot of the headlines out there, like NVIDIA is going to invest billions and billions of dollars into OpenAI. You really got to be really good with the overall AI trade if you're going to make a quote-unquote trade on NVIDIA. I still own shares of NVIDIA. I have a highly concentrated position. I am doing with NVIDIA something that you're probably not. I'm not just buying and holding. I'm using options on my gains to make sure that I get more income while I slowly start to unwind it. But I've also opened a position in a long short fund, which is helping me lower those capital gains in NVIDIA, Apple, and Microsoft. Earnings report today after the market closes from Hims and Hers. They're in the news for coming up with knockoff GLP-1s, sometimes almost flagrantly illegally, and then being told by a judge to stop it. That is a civil war of a stock. Too much drama for me. I've had to tell women that I dated in my 20s and 30s that too much drama it's not good for me. So I have to say no to it. Domino's reports tonight. Domino's reports, and they're growing market share in the pizza market. Domino's is an interesting one in the sense that in a bad economy, people still get pizza because they feel there's a good value for a family, where you can get a $25 large pizza and feed a family of 4. Not healthy, but you can get enough carbs and calories in them to keep the belly roaring with energy. Tomorrow we get the February consumer confidence numbers. Earnings from Alibaba, AMC, Home Depot, Keurig, Dr. Pepper, Cipher Mining, Workday, and HP. Wednesday, we get NVIDIA, Salesforce, TJ Maxx, Lowe's, IonQ, and Snowflake. Thursday, we get CoreWeave, Warner Brothers Discovery, Baidu, Vistra, SoundHound AI, Rocket Labs, D-Wave, Quantum, Intuit, Dell, Celsius, and Autodesk. So it's a big earnings week on some of the fringe players, if you will, with NVIDIA, obviously the AI play that we're going to be focusing front and center. But names like CoreWeave, they are an ancillary / tertiary play on AI. Then you get the Netflix Warner Brothers Discovery with WBD reporting on Thursday. So there's a lot going on. But there's no earnings like NVIDIA earnings at this point in time. There's a lot of chips riding on NVIDIA's fourth quarter earnings report. The tech giant is the world's most valuable company by market cap, accounting for roughly 8% of the entire S&P 500. I've already mentioned that their valuation is making them look a lot more attractive now than, say, a year ago. The Magnificent Seven has turned into the Lagnificent Seven, or the Lag 7, if you will. Tuesday night is going to be an interesting one as well. It's going to be a wild State of the Union speech with President Trump having to go into Congress's house and give a speech. And some of the people that marched in beforehand, Supreme Court justices. And Trump had some not very nice things to say for 3 of the conservative judges who struck down his tariffs on Friday. It'll be interesting to see if that translates into a tense or any dramatics at the State of the Union. Just seeing that, him and the Supreme Court justices for the first time since the High Court struck down a lot of his global tariffs. The issue's going to get mentioned in front of them, along with affordability, immigration enforcement, and Iran. Between all the smiles, the scowls, and the standing ovations, the address is basically the body language Olympics, if you will. That's not my line. That's somebody else's line. And I am a little sad to see the Olympics go, only because it was fun to get into the final week. What's up with curling? Why does that seem to last every day of the Olympics? Like 16 days of curling. I've had enough. Put it away for 4 more years. Although there was some drama involved with cheating. Let's take a look at the market numbers year to date. Brent crude's up 17.3%. Silver's up 16.7%. Gold up 17%. So all 3 of them are within 1% of each other. It's commodity supercycle year. Is it the year for the Magnificent Seven? Not as much. The Magnificent Seven are down 4.2% year to date. Compare that with the S&P 500, which is up 1 percentage point roughly. And the Morgan Stanley Country Index All World up 3.6%. Russell 2000's up 6.2%, doubling. So tech's not the trade this year for the first 2 months. NVIDIA will have a lot to say about that when they report their earnings. NVIDIA is reportedly close to investing $30 billion in OpenAI. This is where it gets a little bit on the wild side. I feel NVIDIA's price to earnings to its growth rate is very attractive right now. But I don't feel as comfortable with OpenAI, especially with Claude's Anthropic really hitting the markets hard with what their AI chatbots can do and build. On top of it, Google's Gemini seems to be dominating the consumer side of the fence, which brings to the question, where does OpenAI fit in? It's going to be a sexy IPO this year. And when I say sexy, we're going to be talking about it. But if it comes out with a valuation of $1.5 trillion, we're going to see that its priced earnings versus growth rate isn't nearly as attractive as NVIDIA's. So what is NVIDIA doing by investing in OpenAI? Again, they're going to win on this. But how many more wins do they have up their pocket with investing in companies that do AI versus selling semiconductors into an industry that wants to see semiconductors so that they can do AI. Being overly exposed to OpenAI has not been a boon for stocks in recent months. Microsoft, SoftBank, and Oracle will tell you that being tied to OpenAI is less than ideal right now, especially since a lot of these deals are very circular. If NVIDIA invests $30 billion in OpenAI, there's an expectation that OpenAI is going to buy billions and billions and billions of dollars, if not more than $30 billion in chips from NVIDIA. Let's take a look at the market swings today. I would say that we have themes that are creating volatility, creating a little bit of a sell-off, very small. AI disruption concerns, geopolitical tensions, tariff uncertainty. Those are the themes of the day. Financials have a big loss today. Private equity names like Apollo Global Management, ticker symbol APO, are down 5.7%. Ares Management down 6.7%. Investors are reassessing their exposure to tech assets, particularly software businesses, perceived as vulnerable to disruption from generative AI and automated platforms. CrowdStrike's down another 8.3%. Wow. I haven't pulled the trigger on this one. I want to, though. I have to do research, then I have to see where the stock is, and I have to do research, and I have to see where the stock is. And right now, it's just moving too fast, too low, which ultimately is good for me because I haven't picked it up, other than the fact that it is in S&P 500 type funds. Fed Governor Chris Waller is giving a speech today on monetary policy. A lot of times when this happens, a lot of that information is thrown out there in pre-market analysis, forms of written speeches. His quote coming out of it today is, taken together, the data were positive, but not conclusive. The labor market is on more of a solid footing and hence also not conclusive about the proper setting of monetary policy. 1 month of good news does not constitute a trend, but a year does. And the year of 2025 was an extraordinary weak one for job creation, the weakest outside of the recession since 2002. That's humbling. Trump's first year of his second term had the weakest job creation since 2002. Furthermore, Governor Chris Waller says, we will not know whether the upturn in this initial estimate of job creation is a signal or noise until we get more data. Fortunately, before the Fed's next meeting on March 17th and 18th, we will get employment and inflation data for February, as well as more data on job openings and retail sales. If this data supports the idea of an improvement in the labor market in January that continued into February, along with additional progress towards 2% inflation, that could result in my outlook turning a bit more positive, and my view of appropriate monetary policy may tilt toward a pause at our upcoming meeting. A lot of people expect the Federal Reserve to cut interest rates when Jerome Powell leaves. 3 cuts would probably move the market higher just on that news alone. But that looks like a very back end of the year kind of story. Maybe June, July, but still on the back end is what I'm getting at. So financials are having a rough day of it. KKR is down 7.6%. Its lowest level since April. American Express is hitting its lowest level since mid-October. Blackstone is falling to its lowest level since December 2023. Capital One Financial, its lowest level since June. Citigroup is finding resistance near its 50-day moving average. MasterCard hitting its lowest level since April. Travelers, ticker symbol TRV, hit a fresh record high before giving back its gain. So the insurance companies may be doing a little bit better. Alethea, it's an investment house, upgraded NVIDIA to buy. It says inventory normalization, data center revenue is tracking $500 billion in outlook. Analyst Warren Lau said we are upgrading NVIDIA from hold to buy. Target price of $250. It's currently at $191. That's 25 times the PE ratio for 2028. Previous concern was that the inventory hike on NVIDIA's balance sheet and the channel, as well as the gradual deployment of rack systems, But right now, they're seeing these both normalizing, supported by robust module build and anticipated improvement of rack shipments. On the demand side, Warren Liu is saying that he estimates industry-wide compute capex will expand 75% year over year to $530 billion, with NVIDIA and TPU supply chains continuing to capture the lion's shares of value creation. The Olympics have wrapped up in Milan, Cortina. I've got a mother-in-law who is a little on the loopy side at this point in time. She was over for the Super Bowl. And she goes, I didn't know Milan changed their name and added Cortina to it. I'm like, no. It's, how do I explain this to someone who's 85, pushing 85? You must have to say that, it's in two different cities, and Milan's still Milan, but Cortina is Cortina. And then you're like, I don't even know if this is worth getting into. But these Winter Olympics were way better than 4 years ago in China, just due to the time of day, being able to watch. NBC and its digital platforms averaged about 24 million views per day, nearly 94% higher than in 2022. U.S. audience streamed about 14.8 billion minutes of Olympic content, more than double the total for all previous Winter Olympics combined. Like I said, who knew that curling could be an everyday event in the Olympics? Guess we found out. Now, if you're not watching the Olympics or streaming the Olympics, maybe your dog or cat wants to take control of the remote from you. There's a YouTube channel called TV Beanie, B-I-N-I. And it's a channel for dogs and cats. It's got 440,000 subscribers. One video has amassed 152 million plus views, which is bigger than the Super Bowl. Numerous hours long videos of squeaky toys, close-up birds and squirrels and playing puppies. Presumably have our four-legged friends watching the YouTube channel. And again, it blows my mind that this kind of content works. Let's take a break here. I do have an event coming up Wednesday, March 11th, 6:30 to 8:30 p.m., Lafayette Library, Navigating Wealth in Uncertain Times. I'm down to doing just 4 live events on seminars with CFPs per year. It's not bad. I used to do 6. Now I'm down to 4. Also, I do a lot of pints and portfolios where I buy you a beer and we talk financial planning. I'd love to see you at one of those, but this one coming up is a CFP event, 6:30 to 8:30, Wealth Preservation Retirement Planning, Lafayette Library. You can sign up and learn more about the event at robblackshow.com. That's robblackshow.com. Take a break here. Got another full segment for you. Stay tuned.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
We're a few hours into the market action today now, as I start this next segment. And it's not getting much better. I just did a TV spot where James goes, seems like you're going to say something about the market's not liking the uncertainty of the tariffs. I'm like, great. I can retire. You now know what's going on. I love it when my messaging gets embedded in the norm of society, the everyday man, so to speak. S&P 500 is down 75. It's down about 1.1%, a little bit worse than it was a few hours ago. Dow Jones Industrial Average down 1.6%, same thing. NASDAQ down 1.1%, and the Russell 2000 down 2.1%. So everything's getting a little bit worse. A lot of question marks. I think some things to look forward to. NVIDIA's numbers on Wednesday. It's trading below its 5-year average of roughly 24 times earnings, and the 5-year average is 38. So it's not expensive. And a couple of years ago, we did this with Alphabet. We looked at it and go, For the growth that you're getting there, it's not expensive. Compared to like companies like Apple, that it was expensive. For the very little growth, NVIDIA is giving you spectacular growth. Now, what's going to be important with NVIDIA in the near-term future is they have to start giving us a plan for what life looks like after the hyperscalers, and then moving into inference, as well as, the long-term replacement cycle of what happens here. Now, again, we're getting breakthroughs almost on a weekly basis from Anthropic's Claude, from OpenAI's ChatGPT, and from companies like Google's Gemini. We've seen some real-world examples that have been upsetting in the last month of what Claude could do to enterprise software. So the whole software trade's just getting obliterated. That could have a turn this week, as you're going to get earnings from a couple big players, including Salesforce, which I think is one of those stocks that have been getting hit that a lot of people want to own. So when I take a look at some of the other companies that have high PEs or PEs that are worth noting, ARM Holdings is trading around 60 times earnings. Broadcom is trading around 29 times, AMD around 29 times, and then NVIDIA 23 times. I'm circling back on that one just one last time, as I don't know if I'm going to get back to it again today. And I think it is a trade going into the quarterly report, minus the fact that a lot of people are upset by how much exposure they're creating and giving themselves by investing in other AI names versus buying back shares or buying other companies that might be in the life cycle of the future of AI. They've done some of that. I'd like to see more of that. These venture capital deals that they're doing, I don't really care for, but it's not a deal breaker for me. But I don't care for it. Let's take a look. Domino's Pizza, their headline margins were pressured at the company-owned stores. The market's rewarding the quality of Domino Pizza's same-store sales growth, which was driven by order counts rather than pricing. The outperformance reflects execution across all four pillars of their strategy. Hungry for more. That's the name of their strategy. Product innovation, i.e. stuffed crust. Renowned value. You get a lot of carbs and calories for $25. Digital leadership with their app, and operational excellence. They have best-in-class franchise profitability, purchasing power, and advertising reach. They're involved in a lot of sports where, we're watching the Olympics, and I'm like, hey, kids, I'd rather sit in front of the TV with you. Let's order a pizza, and I'll go pick it up, or we could have it delivered. So they also did a dividend increase, further reinforcing management's confidence that the growth algorithm, same-store sales plus disciplined net unit expansion, remains firmly intact despite near-term cost volatility. Most expensive part of a pizza, you probably well know, is the mozzarella cheese. So the payment ecosystems getting hit today. American Express down 8.1%, Visa's down 2.9%, MasterCard down 3.7%. There's concerns that advances in AI could displace a meaningful share of white-collar jobs. For card networks and issuers, that raises concern not about the long-term viability of electronic payments, but about the potential downshift in growth for high-ticket travel, entertainment, luxury categories that have been powerful earnings drivers this cycle. So if you cut the white-collar jobs, and I'm going to go up to Vancouver, Washington, and hang with other white-collar jobs from CFP Chad Burton's office. I'm going to meet a couple of his prospects. That flight I may not have to do in the future if you're talking about white-collar jobs being displaced by AI. I get it. And when I do go, I do spend. I spend locally, and I spend, bigger than I will on any given weekend. Let's talk about some of the other big stories out there today. Alyssa Liu's Olympic gold worth about 10 to 15 million in career earnings, it looks like. She unlocked a multi-million-dollar commercial runway. The payout is very modest for winning a gold $40,000 by the U.S. Olympic Committee. But there was a wealthy man who threw up $200,000 for all Olympians and Paralympians, whether you won a medal or not. $100,000 currently, and then $100,000 when you pass. I think that's being done in some sort of annuity for the family. And the guy who's donating the money, he is big into annuity, so that kind of makes sense. Olympic gold in 1992, Christy Yamaguchi earned $3 million annually in sponsorship at her commercial peak. Companies like Coca-Cola, Chevrolet, and Disney love it. Long-term ice tours like Stars on Ice, Disney on Ice. Speaking engagements, $25K to $75K per appearance. I was once speaking at a Visa event that was designed for women. And I don't know why. Well, I was there to obviously talk about women investing. And women are different than men. Women live longer. Men tend to get married to younger women. I know that is a changing norm, but it's still out there. My mother outlived my father by over 20 years, as an example. So you really got to make that part of your thought. But I got to speak right after one of the Girl Scouts leaders. She did an amazing presentation, and she brought 4 Girl Scouts with her who had all done things like donating money, not donating money, but raising money for, villages in Africa to replace kerosene lamps with LED lamps so that accidental fires don't take down a village. One of the girls came up with I believe a washable tampon. Not paying as much attention as tampons are not part of my world. And I was impressed that what an organization the Girl Scouts are. I kind of think they're better than the Boy Scouts. I really like the Girl Scout cookie angle. I know you're saying, okay, move on, Rob, move on. Okay. So right before I spoke, the mother of Michael Phelps spoke, and she left a water bottle on the podium. I grabbed the water bottle and I asked the crowd, before I started my speech, I'm like, I got Olympic DNA. I'm going to sell this on eBay. And I was told she wasn't too happy with that statement from me. I didn't mean it in a bad way. So there's a channel on YouTube that, believe it or not, is geared towards our cats and dogs. It's called TV Bini, B-I-N-I. It's got 440,000 subscribers, 152 million views, numerous hour-long videos of squeaky toys, close-up birds and squirrels, playing puppies. And I think supposedly our 4-legged friends are watching it when we're not at home. Or it just goes to show you that YouTube doesn't create any of this content. They don't have the content costs. That's one of the reasons I like Alphabet. Facebook doesn't have the content costs either. Now, YouTube TV obviously has to pay for content. And one of the things they're doing to continue to try to disrupt linear television is they're rolling out packages now that are cheaper than the current overall package, but they're skinnier bundles tied towards movies or tied towards sports. Seems to make a little bit of sense. Let's move back into the world of stocks because somehow I got into YouTube channels and dogs, and I apologize. I'm one to deviate pretty easily at times in my storytelling, but I always come back. So there's a company called Grail, and their stock is down 50% recently. They do a blood test for detecting cancers. I think what I read in their research is the stock's getting hit because although they can identify where you might have cancer markers, it's still not leading to a reduction in deaths of cancers. So you can find out that you've got stage 1 or stage 2 of kidney cancer, for instance. Still going to take you down is the thought that I was reading in the research. England's National Health Service did not show a statistically significant reduction in later stage cancers amongst people who took the test, though there was a favorable trend over time. Grail sold 185,000 Gallery tests in 2025, generating 136.8 million, up from 109 million in 2024. So blood tests are huge. Lab tests, I think it's worthy of note that you can go invest in companies like LabCorp of America. And I don't think they're hurting for business. If you've ever gone to give blood recently, not to give blood, but to have a blood test drawn, those lobbies are always full. So Hims and Hers is going to report numbers tonight. They're kind of in that world of Grail, of telehealth and some of the new innovations out there. Chinese EV maker NIO is climbing today following news that the company provided 1 million battery swaps in China in less than a week. NIO's battery swap process is an alternative to charging. Depleted EV batteries are swapped out at stations for fully charged ones in less than 3 minutes. Significantly faster than fast charging. The company, which operates 3,700 swap stations, said it has broken daily swap records in China 6 times this month. That's impressive, I guess. PayPal is jumping after reporting unsolicited takeover interest, and that's interesting. They're up 7.5% today. They fielded meetings with banks amid unsolicited interest from suitors. There's an appetite from one large rival to buy the entire company, while other potential purchasers want only certain parts. Earlier this month, shares cratered after the company posted weaker than anticipated fourth quarter results, and 2026 profit guidance was lowered. They also announced the new CEO, or not the new CEO, but the CEO is leaving, so there will be a new CEO. SanDisk continued to shake off a slump that hit shares last week. It's up 6%. They priced a secondary offering of almost 6 million shares, which are owned by former parent company of Western Digital. Tomorrow marks a year since SanDisk started trading on its own. After its spinoff from Western Digital, the stock soared amidst a global shortage of memory chips. The stock is parabolic. Software stocks are cratering today again as an independent research piece details potential AI dystopian scenario. I don't like this. I can turn on CNBC and see Jim Cramer get all frothy at the mouth. This is a buy. Like, it's just not my thing. So the dystopian, not too distant future where AI is displacing whole segments. Software stocks are getting shellacked right now. There's a post published by Citrini Research, a well-known negative research firm. They tend to short stocks before they actually tell us why. I don't like that. But there's some things I do like about Citrini. They do a lot of great pieces on the big picture of the future. So they published something called the 2028 Global Intelligence Crisis. Now, if you look at the calendar, it's 2026. This says 2028. It's a hypothetical scenario analysis exploring the left tail risks in 2 years time from now in a world where there's an aggressive AI build out and adoption of AI agents. I saw OpenAI just hired like McKinsey and a couple other consultant firms to help big enterprises figure out how can they use AI agents. So what follows is a scenario, not a prediction, according to the authors of the report. The original tweet with a link to the piece from Citrini Research received 4.5 million views. It's been retweeted 2,100 times. It's been bookmarked 12,000 times. What if our AI bullishness continues to be right? And what if that's actually bearish as the build out of AI continues to happen and corporations start implementing AI agents in their business model, and you get a situation where the software as a service companies are forced to offer steep discounts to customers for 2027 renewals to avoid being displaced by new AI tools. The systems of record like ServiceNow are issuing dire results in 2 years. Now, again, this is hypothetical. This is part of their story of what if. So you're seeing CrowdStrike down 10%, DocuSign down 7%, AppLovin down 9.3%, Atlassian down 7.8%, Datadog, Asana, Oracle, Salesforce, Adobe, ServiceNow, Palantir across the board and getting crushed. And like I said earlier in this segment, you're also getting companies like MasterCard, Visa, American Express, and Synchrony Financial, as well as Capital One falling as they're being flagged as if all the agents are displacing real jobs at ServiceNow, Oracle, Asana, Workday, Atlassian, DocuSign, CrowdStrike, AppLovin, Datadog, Salesforce, Adobe, and Palantir, there's going to be less business travel. Interesting, no? No. OpenAI's Stargate has been a chaotic mess. This news came out this morning. Sam Altman stood alongside President Trump, Oracle's Larry Ellison, SoftBank's CEO Masayoshi Son, to announce an ambitious $500 billion plan to build massive data centers in the United States called Project Stargate. While today an actual Stargate 1 gigawatt data center is certainly well under construction in Abilene, Texas, it turns out that there wasn't much of a plan in place. The past year has been full of partner disputes, debt problems, and scuttled plans. Uh-oh. Do you hear China sneaking up on the U.S. in robots? I do. Do you hear China sneaking up on the U.S. in AI? I do. And their government supports both of those industries. Dan Ives says the AI represents a huge opportunity for cybersecurity firms as losses mount. He's never one to not slip out a quote. The havoc being wreaked on CrowdStrike, ticker symbol CRWD, on Zscaler, ticker symbol ZS, and Cloudflare. Similar to Dan Ives' broader thesis on the software sell-off, he's called overblown. He's arguing the companies getting hit may ultimately become core participants of the AI revolution. The Wedbush securities analyst says AI is actually a positive for cybersecurity stocks. Anthropic is going after this market with an initial tool that validates our thesis that cybersecurity is the next frontier for the AI revolution, arguing that AI is elevating the risk environment and that the need for cybersecurity firms in the first place. AI will be a major tailwind to the cybersecurity sector over the coming years as protection of use cases, data, and endpoints expand markedly, he says. Who are you going to believe? Bitcoin's market pain is intensifying. This is a story that's not good for those of you who are expecting it to the moon. Asset continues to struggle, dropping below 65,000 today. Bitcoin's market cap has dropped about 1.3 trillion from its peak of 2.5 trillion on October 6. Remember, in the last few drop downs, it fell 75% from its high. Not 50, 75. So is there more to come? Over the weekend, former Bitcoin miner BitDeer, ticker symbol BTDR, announced it had sold all of its Bitcoin holdings to fund its pivot to AI. They're losing investors, and they need to replace investors' Bitcoin. That's what that story tells me. Eli Lilly is once again the winner chicken dinner over Novo Nordisk. The Danish drug maker's next generation obesity drug called CagriSema wasn't more effective than Lilly's Zepbound in a head-to-head trial. Novo Nordisk shares down 15%. I think Lilly is the winner in GLP-1s. I've said that for 2+ years. Only because of what I had heard out of the research departments, that it was better and that Eli Lilly has a kick-butt supply chain management business model. Alphabet got upgraded to buy from hold at Wells Fargo. The Wells Fargo analyst said it's a leader in customer data, distribution, and compute capacity. Customer data, they got us on email. Distribution, they have us on email and all their logins that we have to do with Alphabet. And compute capacity, they're doing well there with their build out. The analyst at Jefferies took a hatchet to a chunk of software coverage stocks. Workday, DocuSign, Monday.com, Freshworks due to more persistent AI risk and negative sentiment. Again, all companies that I know, I've done research on, but none of them that I actually own. Closest software name that I've come to owning is Salesforce, and for some reason I never tend to get it. Both lucky and, well, lucky. Because you look at the business model of Salesforce from the last 5 years ago, it's attractive now. But Wall Street's looking to the future, saying, how's it going to hold up in AI? When it's time to buy, if I do enough research on it, I'll talk about it. OpenAI is boosting both how much cash is expected to come through the door and how much it's going to be sending out. OpenAI increased its revenue projection for the next 5 years by 27%, now forecasting $112 billion in additional cash burn, though. New revenue streams like advertisements are likely contributing to the improved top-line outlook. Top line being revenue, bottom line being earnings. OpenAI is in the midst of nailing down $100 billion in funding from NVIDIA, Amazon, SoftBank. Again, the whole circular side of this is a little bit disturbing for some. UBS upgraded BlackRock to buy from hold, $1,280 price target. The analyst sees durable fee growth and margin expansion. BlackRock has had a good quarter, but maybe not good enough, according to some. I like BlackRock for the long-term patient investor. It's not a stock that gets me excited in the short term. John Deere shares are up 40% this year. Jefferies downgraded the farm equipment giant to sell from hold. saying that the market has already priced in a full recovery in the agricultural cycle. Stock's earnings multiple, which is north of 34, is expensive in current market parlance. This year's stock market is different than last year's stock market. The winners look quite different, to be honest with you. And the losers look quite different. Let me give you some examples. Energy stocks as a group are up 22.7% this year. Year to date, maximum drawdown has been about 4% in energy. The upside on materials up 16.3% year to date. The downside's only been 2.8%. Move over to industrials, up 14.3% with very little drawdown of 2%. So it's been persistent and consistent winners. Tech and financials are the laggards. Tech is down 3.4% for the year, but it's been down as much as 8.2%. Financials are down 4.2%, down as much as 8.4%. So the rotation is showing up not only in tech, but financials and discretionary are losing their flavor from last year. And that money is being rotated into healthcare, into utilities, and staples, and industrials, materials, and energy stocks. Investors made a killing betting on asset-light, high-margin business models of the Magnificent Seven, and then they became suddenly huge asset purchasers with data centers. The rapid rise of AI agents, systems that can autonomously execute complex workflows, has raised questions about the demand for traditional software going forward. Later today, my next podcast, I'm going to go over 6 stocks that Citibank says you should buy as the bull market enters a new stage of volatility. I have a little bit on an Axe body spray. I know you're saying Axe body spray. It's a business that in 2006, Axe had about $71 million in U.S. sales. Not very much. But 6 years later, their product sales were close to $500 million. Then you can smell sweat come onto the company. Their market share of deodorant sprays in the U.S. fell from 24% in 2020 to 16.3% in 2025. They're not winning the war of perception on Twitter or Instagram. Something I'm a big fan of is trying to tell you everything that I can about what I'm doing. I'm in my 50s, and I know people that have died. And what life and death have taught me is to enjoy the present while still saving and planning for the future. My kids probably don't appreciate me as much as they should, but if I were to pass, we've done some great things together. And if I were to pass, they'll have a nice future. Interesting note, and I'd love to hear your feedback on this. One of my sons, this morning, while driving him to school at 5:30 a.m., said that he wants me to get a new car. And I'm like, I'm not really a new car kind of guy. My vehicle's 10 plus years old now. And he goes, yeah, some of the kids, at school get dropped off in BMWs, and it'd be nice if you had one. I'm like, oh, you're being materialistic. He didn't like hearing that, but should I do it? I have the money. But some of these cars that I have are going to go to both of my children so that they can destroy them, per se, as their first car. I think we all need a junker of a car that we first owned. And I've got 2 cars that are 10 and 12 years old that they're going to inherit. Not inherit, but I'm going to give it to them when they hit that driving age, because I know that very likely there'll be a car accident before they're 25, and maybe they don't have all the safety features that they should have, and maybe I'll regret that one day. But it's also the bumps and bruises that come with, what I'm talking about. Kids aren't very nice to cars. If you have any ideas for me, should I buy a car or not? I would love to hear it. I do have one live event coming up I would love to see you at. It is not a Pints and Portfolio. It is a seminar. It is Beyond the Noise, Navigating Wealth in Uncertain Times, 6:30 to 8:30, March 11th at the Lafayette Library. Free parking, easy parking, great restaurants right there. I'll be there from about 5 p.m. till about 9:15, answering questions for you. But if you are also my age, heading towards retirement, if you have questions on your estate plan, insurance, investing, what stock should you be in? What sector should you be in? Should you start investing for income stocks to replace your W-2 income that might get lost soon to AI and or just might get lost to you retiring? Come to the event Wednesday, March 11th. Sign up at robblackshow.com. That's robblackshow.com.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.